Let's talk about something that makes a lot of business owners nervous: business loans and credit. For many entrepreneurs, the idea of borrowing money feels like a trap. Debt, interest, risk. It sounds like the exact opposite of smart business, right? But what if I told you that using loans and credit wisely can actually be one of the fastest, smartest ways to grow your company? I'm going to walk you through how I learned to use financing as a tool, not a crutch, and how you can use business credit strategically, avoid common traps, and unlock growth that would take years to achieve otherwise. Whether you're just starting out or already running a business that's growing, this is a game you need to know how to play. Because at the end of the day, the people who know how to use money wisely are the ones who scale first, faster, and more efficiently. So let me start by busting a myth. Debt is not automatically bad. In fact, debt is one of the oldest and most effective tools in business. Large corporations use it all the time to expand, buy assets, launch products, and even acquire competitors. The real issue isn't debt itself. It's how you manage it. The truth is, there's a difference between good debt and bad debt. And knowing the difference is where smart business owners separate themselves from the rest. I'll never forget the first time I took out a business loan. I was terrified. It wasn't a massive loan, just enough to invest in some much-needed equipment and a bit of marketing. But I spent days debating it, worried I'd mess something up or regret the decision. Looking back, that decision helped me double my revenue within 6 months. Not because the money magically changed everything, but because I used it intentionally. That's the key word, intentional. So how do you use business loans and credit intentionally? First, you need to understand why you're borrowing. If your plan is to take out a loan just to have a cushion, stop. That's not a strategy. That's stress relief. You should never borrow unless the money is going to generate a return. If you can turn $10,000 into $15,000 or more within a reasonable time frame, you're making a smart move. But if you're borrowing to cover mismanaged expenses or just to buy time, you're only making the hole deeper. Every loan or line of credit should be tied to a specific strategic purpose. Think investing in new equipment that increases production, hiring a key team member that can boost revenue, running a well-tested ad campaign that consistently brings in paying customers, or securing inventory before peak season when you know demand will spike. That's how you turn borrowed money into growth, not stress. Another key factor is understanding the true cost of borrowing. This is where a lot of business owners get into trouble. They see a loan offer and focus only on the monthly payment. Oh, it's just $400 a month, I can handle that. But what they don't calculate is the total interest, the term, and how long it will take to see a return on that investment. Before you borrow a single dollar, you need to ask, what's the interest rate? Are there fees? How long is the repayment period? And most importantly, what's the timeline on the return? Let's say you borrowed $20,000 to hire a sales rep, and that rep generates $10,000 in new business every month. You're winning. But if you borrow $20,000 and use it on a vague brand awareness campaign that doesn't track ROI, that's not growth. That's gambling. Don't gamble. Be precise. Be data-driven. Know your numbers. Now let's talk about business credit. This is a tool that's often misunderstood, but when used right, it becomes a lever for growth. Building business credit early, even if you're a solo founder or freelancer, is one of the smartest things you can do, because it separates your personal finances from your business, which protects you, and it opens the door to larger credit lines, better interest rates, and more flexible repayment terms over time. So how do you build business credit the right way? First, make sure your business is properly set up. That means you need an EIN from the IRS, a business bank account, and ideally your company should be registered as an LLC or corporation. From there, start small. Apply for a business credit card, one with rewards or cash back, and use it strictly for business purchases. Pay it off in full every month. That builds trust with lenders and boosts your credit profile. Next, work with vendors that report to Business Credit Bureau. Not all of them do, but companies like Uline, Granger, and Quill often report payments if you open a Net 30 account. The goal here isn't just to use credit, it's to build a reputation. A financial reputation, because later, when you need to apply for a bigger loan or a line of credit to fuel major growth, lenders will look at that history, and the stronger it is, the more options you'll have. Now let's get into a reality check. Business credit is not free money. Some entrepreneurs treat it like a safety net and swipe the card whenever cash is tight. That's dangerous. Using credit to cover shortfalls like paying rent because your revenue dipped is not a growth strategy. That's plugging holes in a sinking ship. If you're regularly using credit to survive, it's time to look at your business model, your pricing, or your expenses. You don't need a loan, you need a financial reset. So what's the smart way to use credit for growth? Think of it like this. If you can borrow money at 10% and make 30% in return, you're using leverage. That's how wealth is built. The key is timing and precision. Credit works best when you already have something that's working, and you just need to scale it fast. Let's say you've tested a Facebook ad campaign that brings in $5 for every $1 you spend, but you only have $500 a month to invest. That's where a business line of credit can unlock serious growth. You borrow $5,000, run the ads, generate $25,000, pay off the credit and repeat. That's a smart use of credit. The same goes for inventory. If you know you can buy in bulk at a discount, and that stock will move within 30 days, using short-term credit can increase your margin. But again, the key word is predictable. Credit should amplify a winning system, not cover for broken ones. Let's talk quickly about loan types, because not all business loans are created equal. Traditional bank loans often come with lower interest rates, but they're hard to get and slow to fund. SBA loans can be great if you qualify. They come with generous terms, but the application process is intense. Then you have online lenders, which are faster and easier but usually more expensive. Merchant cash advances. Avoid them unless you're in a tight one-time bond. They're quick cash, but the repayment terms can bleed your revenue dry. My recommendation: start with a small business credit card and build your credit history. Then explore a business line of credit from a reputable lender, something flexible that you can draw on when needed. If you're making consistent revenue, look into term loans that match your growth plan. Don't just take the first offer. Shop around, negotiate, ask about fees. A loan is a partnership. Make sure the terms work for you. Here's one thing I wish someone had told me earlier. The most successful businesses I know don't grow because they avoid debt. They grow because they master it. They know when to borrow, how much to borrow, and exactly how they'll turn that money into more. It's not about being fearless. It's about being financially strategic. If you're thinking about using a loan or credit to grow your business, start by asking 3 questions. First, what exactly will this money be used for? Second, how will it generate a return and how soon? Third, what's the worst case scenario and can I handle it? If the answers make sense, you're probably on the right track. At the end of the day, money is just a tool. Used carelessly, it'll hurt you. Used wisely, it can change everything. The goal isn't just to grow fast. It's to grow strong with financial systems that support your vision, not drag it down. Use loans and credit to unlock opportunity, not to chase survival. And always remember, growth doesn't come from how much you spend. It comes from how smart you are with the money you borrow. If this video helped you understand the power of using loans and credit strategically, do me a favor, give it a like. And if you're serious about building a smarter, more profitable business, subscribe, because every week I'm breaking down finance, growth, and leadership in ways that actually make sense. Drop a comment and let me know. Have you used credit to grow your business, or are you thinking about it? I'd love to hear your story. Thanks for watching. Keep building, keep learning, and I'll see you in the next one.